Stock markets mostly fell Wednesday in thin trading, following a year of record gains for key assets as central banks cut interest rates and the tech sector boomed on growth of artificial intelligence. London's benchmark FTSE 100 index closed down 0.1% in a shortened trading day, having reached a record high Tuesday close to 10,000 points. The index jumped more than 21% in 2025, the biggest gain for 16 years, thanks to interest rate cuts from the Bank of England as well as U.S. Federal Reserve following drops to inflation. Across the globe, stock markets have struck record highs and enjoyed double-digit gains in 2025. To push meaningfully higher in 2026, equities will need confirmation that the Fed can deliver at least the 2 rate cuts still priced by the market, with growth unimpeded, noted Stephen Innes of SPI Asset Management. The Federal Reserve's monetary easing in the second half of this year has been a key driver of global market improvements, compounding a surge in the tech sector on the back of the vast amounts of cash pumped into AI. Minutes of the Fed's policy meeting in December, which were released on Tuesday, indicated that most of its officials see future rate cuts as appropriate, should inflation cool over time as expected. At the same time, concerns that valuations of AI stocks are too high gnawed at investors late in 2025. iChip juggernaut Nvidia became the world's first $5 trillion company at the end of October, while its current worth stands at around $4. $5 trillion. The price of gold, seen as a safe haven investment, scored multiple record highs this year. The precious metal has benefited from weakness to the dollar caused by the Fed's rate cuts and economic growth concerns triggered by President Donald Trump's war on tariffs. Oil prices have retreated nearly 20% over the year, pressured by an oversupplied market. Bitcoin, emphasizing the volatile nature of the cryptocurrency sector, soared to a record high above $126,000 in October before ending the year around $88,000. In stocks trading Wednesday, the Paris market closed down 0.2% after Hong Kong ended the year with a loss of nearly 1%. Over the year, Hong Kong's Hang Seng index won 28%. Tokyo trading had ended Tuesday, with the Nikkei 225 jumping more than 26% this year and Seoul rocketed 75%. Frankfurt, which also ended its trading year Tuesday, rallied 23% in 2025, while Paris saw an annual gain of more than 10%. On Wall Street, which holds a half-day of trading on Wednesday, the main indices are set for double-digit annual gains with the tech-heavy Nasdaq Composite up over 21% for the year. The MSCI All-Country World Index, featuring a cross-section of major global companies, has an annual gain of around 21%. On Wednesday, the price of silver slid further, having struck record highs in December. Key figures at around 1300 GMT, London, FTSE 100, down 0.1% at 9,931. .38 points, close. Paris, CAC 40, down 0.2% at 8,149.50, close. Frankfurt, market closed for holiday. Hong Kong, Hang Seng Index, down 0. .9% at 25,630.54, close. Shanghai, Composite, up 0.1% at 3,968.84, close. Tokyo, market closed for holiday. New York, Dow, down 0. .2% at 48,367.06, close. Euro, dollar, down at $1.1755 from $1.1774 on Tuesday. Pound, dollar, down at $1. $34.66 from $1.3503. Dollar, yen, up at 156 yen and 62 sen from 156 yen. Euro, pound, up at 87. 29 pence from 87.15 pence. Brent North Sea crude, up 0.3% at $61.50 per barrel. West Texas Intermediate, up 0. .3% at $58.12 per barrel. AFP.